It's about that time of day again. My name is Joseph. Wednesday evening, June 13th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is range bound and trading at the high of the range this evening. That tells me to focus on failures and wait for that two-try rule for selling opportunities going back down into the range tomorrow morning. The S&P is also range bound and trading down at its lows this evening. And the strength of this move lower tells me to stay patient and wait for the momentum to turn back to the bull side before looking for buying opportunities on Thursday morning. Nasdaq is range bound as well, this time with a triangle pattern tonight. So my plan is to buy the low, sell the high, and focus on failures using that two-try rule tomorrow morning. Gold is also range bound and trading at the high of the range this evening. And the strength of this recent run higher is telling me to wait patiently for a pullback and the two-try rule before I look for sells back down to those lows tomorrow. And of course, the euro is also range bound and trading smack in the middle of the triangle. And of course, we've got major news only a few hours away for all you euro traders. So my plan is to focus on failures, fading those breakouts using the two-try rule on the range back into the range tomorrow morning. Well, we're halfway through this week of crazy major news, and with the most markets rotating back and forth with strong runs inside their ranges, our goal tomorrow is to harness the power of the two-try rule and keep fading those breakouts back into the range until something changes. As always, I've got a great newsletter in store for you guys and gals tonight. We got a bunch of reliable trading opportunities setting up for tomorrow morning. Before I jump into those charts, though, I do want to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out in text right here on my blog at sidewaysmarkets.com. Also, if you have any questions about anything covered in this video this evening, please remember you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything going on here at School of Trade, head over here to Sideways Markets, right? This is where all the action happens every day. I'll put the link in the description of the YouTube video. While you're here on the blog at Sideways Markets, make sure you join our mailing list. Give me your name and your email address, and I'll shoot you an email every time I publish something new. And also, don't forget, if you're on social media, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice, I'm posting content throughout the week, charts, links, quotes, updates, all kinds of great stuff. Just posted a great new video right on our Facebook channel, right? So grab that social media link in the lower left-hand corner, and I'll see you on social. How about some charts here for tonight? How about them for tomorrow? How easy is this? All the charts from tonight's video, you can have them on your computer ready for tomorrow. Just follow that link to download today's charts. And speaking of tomorrow, what are you waiting for? Upper right-hand corner, grab that free pass. Come out and join me as a guest in the trade room. Come learn more about our trading strategy. Grab that free pass in the upper right-hand corner if you're not a member here at School of Trade. And please don't forget, if you have any questions, post them in the comment section below or holler at me using that live support button on the right-hand side of the website. All right, hope you guys had a great Wednesday session. As always, though, we're going to have a busy day coming right around the corner. Tomorrow is Thursday, June the 14th. What do we have on the schedule here for tomorrow? Well, of course, again, we're kind of battling our way through this week of major news, right? We had the Bromance Summit on Tuesday, representing the U.S. and North Korea, right? Today, of course, was FOMC, as discussed in last night's newsletter, right? They did exactly what everyone was thinking. They raised rates by a quarter point, and they also confirmed for 2 more raises this year. Now, I'm not sure about you, but it's June, right? We're already halfway through this year. In fact, we are pretty much halfway through this year, right? We are about halfway through the month of the 6th month of the year. So that means they've got 2 more rate hikes, right, but to cram in, right, before we head out of for vacation at the end of the year for our holiday break. So we're going to have an aggressive rate hike schedule, right, coming in. So that always means good stuff for us here in the future. And tomorrow, right? Tomorrow, nowhere near as dramatic as the summit and the FOMC. Tomorrow is all about the ECB. I don't have it on this website, but tomorrow morning at 7:30 a.m. Eastern time, you're going to hear, well, you're going to hear the announcement, right, from the ECB. 7:30, 7:45, 8 o'clock, and then he'll have his press conference at 8:30. The most important thing for tomorrow is euro and gold. Euro and gold. Euro and gold. Be very careful, right? Because, of course, just like the FOMC, the ECB is also expected to be announcing the fact that they're going to be winding down their QE program, right? Winding down the purchases of bad debt, right? So, of course, the U.S. today, tomorrow, ECB. So what you need to be aware of is tomorrow morning, gold and euro, you've got to keep your eyes on those because they're probably not going to be very friendly to trade. I find that the euro is always a very difficult market to day trade when Draghi is speaking, and this could be up until about 9:30 tomorrow. I would say after 9 o'clock, we'll kind of take the temperature of the market and see how it looks, but usually when Draghi is speaking and speaking about stuff that I would expect tomorrow everyone's going to have to react to, as far as the big banks go, as far as the big hedging firms go, as far as people who actually move these markets, I would expect tomorrow to be pretty choppy for gold and euro. Hopefully I'm wrong. Hopefully I'm wrong. But typically when Draghi speaks, people tend to listen when it comes to the euro and the gold. The rest of these markets, oil, right, and the E-minis, hopefully tomorrow we've got some smooth sailing here tomorrow. Hopefully tomorrow will be a lot less dramatic than we saw today, of course, with FOMC. So keep that in mind tomorrow morning. And then tomorrow afternoon, right, just be a heads up here. We do have quad witching coming on Friday. Quad witching is always a complete question mark, right? Sometimes it's great, sometimes it's horrible. Sometimes it's high volume and high volatility, sometimes it's low volume and barely has a pulse. What I know for sure is that tomorrow afternoon you're going to see a bit of a hesitation in the markets before that quad witching, right? Because people always know that quad witching is a big question mark. So the reality is tomorrow, difficult on euro and gold early in the day, so be careful early on euro and gold. Hopefully a full session on crude and the E-minis. And again, keep your eyes on the price action tomorrow afternoon. And if it starts slowing down on us, right, that's your cue to get the heck out of there ahead of that quad witching. We'll talk about the quad witching plan on tomorrow night's newsletter. All right, so come back and see me again tomorrow night for more on that. Now, got that out of the way. Do we have any major news tomorrow scheduled besides the ECB? We do have jobless claims and retail sales. Now, jobless claims is a sleeper. Nobody cares about jobless claims. But retail sales definitely has the potential, right, to hit markets like the Nasdaq, obviously because of the Amazons, right, of the world, right, being part of the Nasdaq. So keep an eye on that tomorrow morning. E-mini, probably not as much. The Nasdaq, I would definitely assume is going to be affected by that retail sales number tomorrow morning. Crude oil, right, E-mini, probably not as much. So lots of stuff coming out early tomorrow, right? Get at it early as always. Earlier the better. And of course, don't forget, speaking of early, set your alarm clock tomorrow, 8 o'clock Eastern time. We'll be in our trade room. We're going to execute this plan together with all of our members. Let's do this. How about some crude? We'll go crude, S&P, Nasdaq, gold, and we'll wrap this sucker up on the euro. Crude is range bound and trading at the high of the range this evening. Now, normally, not normally, but I always want to sell the highs of a range using buyer failures. But the strength of this move higher, combined with the potential for the pendulum swing to keep pushing higher, tells me to wait for proof the momentum has changed before selling opportunities back down into the lows tomorrow morning. Now, couple things here tonight. The big word of the evening here tonight is going to be strength, right? It's going to be strength. We are ranges, but with the FOMC announcement this afternoon, you're going to see a lot of this stuff. Now, this is from the inventory report here this morning, but you're going to see a lot of these big, strong moves tonight on this video. And what you want to remember is that anytime we see a market, right, that makes a strong move in one direction, Okay, I don't care what level of resistance up here. I don't care what Fibonacci extension it is. I don't care. It doesn't matter. Anytime we see a strong move in one direction, you can expect a pullback and a significant attempt to give you a second leg higher, right, up to retest that high. Now, notice I didn't say it's guaranteed, right, because there's nothing guaranteed. We're not guaranteed, right, to get that run back higher. But what I will tell you, though, is, right, if we have a major level of resistance up here, such as, I don't know, the range high, right, like we have a lot of charts here tonight, right, trying to sell this market back down into that range is going to be difficult because you're going to keep having buyers that try to buy this thing back up. So what you want to do is when you have a real strong move in one direction, no matter what the scenario is, especially on a range environment, what you need to do is, and what my plan for tomorrow is to let them try to go higher, right? I'm not going to fight this. I don't really feel like I want to buy this market right now because of where we are at the top of that range. But once I see that strong move up and then let those buyers try a second time, right? This is a variation of what we call the 2-try rule, right? Strong move up once, strong move up, pulls back and tries again, right? That's the 2-try rule. Once we see that, then we can start looking now from there, right, to go back down into that range once the momentum starts to dry up. And what you'll find is that when a market has a real strong move, right, it's got that bam, right? And then what will happen is it'll pull back slowly, right? And then boom, right? It'll try it again. And you'll feel it. You'll feel that strength as the sellers get stuck and they get jumped, they get forced out, and the buyers come back in. You're going to feel that strength going up again, but once it goes back up and gets back up around these highs now we wait and see. They're either going to blow through those highs, and that's our cue right now, just looking for a spike in channel, right, and buy the pullback, or they're going to start to collapse off that high. And once we see that momentum start to shift, then we're looking for that move back down in. So the moral of the story is we're going to see a lot of these strong moves here tonight. There's a lot of them, whether it be the inventory report on crude oil, right, or the FOMC announcement, right, on all the other markets. We need to allow that momentum to try again, right? And of course, let the momentum shift before we start looking in the opposite direction. This is a mistake that a lot of new traders, I made this mistake all the time as a rookie. I would say, well, we're at the high, sell it. But the reality is you've got to put yourself in the shoes of the opposite side of the market. Yeah, I can see right now we're at the top of this range. This is pretty much the same range from last night's newsletter. I've just updated a little bit here, right, for tonight's video. But the reality is, though, we're at the high of this range. I want to sell back down. But think about it this way. Could this also be a spike in range of its own? Oh, absolutely. And if this is a spike in range, where do you think buyers are hanging out? Yeah, they're hanging out down here. Right? They're going to wait for that market to pull back. They're going to try to buy it again. Right? What would you do if all you saw was that spike up? Right? You would also think to buy that pullback. Right? This is the same thing, right? This is a bigger example of a spike in range. And look what happened. They bought the move lower, just like we talked about, right, in last night's newsletter. So this is a smaller version now. So what I have to do is I have to wait, let those buyers get out of their system, and then we can look for that sell going back down in. Right? At the same time, we have a pendulum swing in play, right? So again, momentum carrying it higher here, got to wait for it to turn, right, and go back in. The other thing I got a concern about here now is we take that trading range, the projection lower, right? The amount of the move lower can be copied and pasted right up above those highs. And what usually happens is that pendulum swings, right, from the middle of the range. That's what happens to balanced market. The pendulum swings down, and then the pendulum will swing all the way back in the opposite direction. We end up getting this, kind of, grindy move, this stingy move going higher that won't give up until it gets it. So let's plan this thing out here right now. Let's plan this thing out. What if it goes up? What if it goes down? Because ultimately, there are a couple scenarios we want to be thinking about. Scenario one would be we keep going, right? And it's a full breakout. Okay, that's an option. It is. Look at the strength, right? There's an option. This thing could keep going. But it's also potential, and the odds are in the favor of this, is going back down to the opposite side of that range. Okay, so here are some options here right now. First, what if the price pulls back? Again, I've got to think, right, when I combine these highs, I've got to think there are going to be buyers waiting down here, right? I'm anticipating that. So ultimately, it's either going to be a trap low up and then back down, or it's going to be a straight failure, and then I've got to get something going up around those highs. Okay, those are the two scenarios looking for if the market pulls back, right? So first scenario would be there's our short-term range. Okay, scenario one, right? Scenario one is going to be we pull back. Let's get this a little bit larger here, right? There we go. Scenario one will be we pull back, right? I'm not selling down here because, again, this is where I expect there to be buyers here. Now, you can try to buy this, but not a good spot to be trying to buy either, right? Not a great time to be buying at the high of this channel. Trust me, I'm going to give you a plan for the buy side here in just about 2 seconds here. So give me a second here on this. So as we see it come lower, I'm expecting these buyers to want to buy back in. I'm going to wait for that momentum to shift, right, and then look for the move back off the moving average, right, to go back down from there, right? Let those buyers, let them try to buy down here, right? And if they're successful, we'll have a plan for that as well. Okay, at the same time here, right? At the same time here, what if we just collapse back down? You know, what if nobody's waiting to buy there? Yeah, unfortunately, sometimes that happens, right? At this point now, the moving average will come over. I'll try to use the low of this as resistance and just sell right up around that high. Remember, we want to sell as close as we can to the high of that range tomorrow. This could be a bit tricky, right? This could be tricky, especially if it just collapses back down to the low. If it collapses back down to the low, then we go one try, two try, and we buy back up. Okay, so what you want to be thinking about is either a trap low that fails back down, right? Or, right, a straight collapse back down. Grab that moving average, and before we get down to the low of that range at 66.04, right, we look for that sell, right? Little sell, right, coming back up around the moving average, right, around that low of that range, right, to sell it back down again. All right, so to sell up around the high of that range. Okay, so those are the two scenarios we're looking for if the market, right, if the market pulls back. Okay, now again, the other scenario would be, right, if it pulls back, if this thing just runs, right, if we just run all the way down to the low of that range. Okay, we're going to look for the same thing we always look for at the low of the range, and that is the two-try rule. Okay, this will be the first try. We'll then look for that second try, which will come around the moving average usually. Look for that second try to go lower. We'll then look for a failure. That failure will lead to a strength, and that strength, right, will lead to a pullback. You'll notice these patterns, right, are going to come as close to the low of that range as possible, right? So again, if we do pull back, if we collapse all the way down to the low of that range, I want to buy now. Again, two-try rule, one try, two try, seller failure. That seller failure shoots higher. Don't chase the move higher, though. Wait to buy it on the pullback as we run back up right into that range. Okay, two-try rule, seller failure, buyer strength, buyer pullback off of that low, right? Trap low, up, failure, back down, or strong move down, sell it back up. Now, I know a lot of you guys are here for the first time today, so to give you guys a cheat sheet, to give you guys an extra deep dive into all these patterns, I'm going to cover a lot tonight on this newsletter. I want to make sure you can get every last drop of this value from tonight's newsletter to really get a deeper dive into this entire trading strategy, to learn all the terminology, all the entry patterns, all the techniques that I use here. I got a free trading class in the upper right-hand corner. Pause the video, grab that free trading class. Not to worry, I'll be here when you come back, right? If you've already done that already, good for you. If you haven't done though yet, right, take the time right now, grab that free trading class. It's a much deeper dive, right, an intense training that will give you the information you need to make the most of our time together every evening on our nightly newsletter. You'll learn a lot about stuff about these markets that you may not be thinking about. So grab that free class in the upper right-hand corner. Now, what if we go higher here? Right? What if we go higher here? Well, this is where things get interesting because now we have that pendulum swing waiting overhead, right? So I have this, we pull back, right? We go higher. Okay, we pull back and go higher. Now we've got the potential now to find a hidden channel, right? So we pull back and we go higher. The idea is a strong move higher here. The key is going to be the strength of this move. The strong move higher here, I'm then going to be looking for opportunities to buy above this high. Okay, and this is where we have to qualify this move going higher. First, going to be a real strong move higher, right? Big strong move. How strong? Strong enough to get it so that we can get a pullback that holds above this 66.85 area. Right? What I don't want to see is I don't want to see us come collapsing right back down in. If that happens, we're going back into that range tomorrow. So if I can get a strong enough move out and then hold right above this, again, what is currently resistance, but hold above it now as support, that's going to be my ability here now, right, to buy off the low of kind of what I'm calling a hidden channel here, right, as we go higher, right? But watch something like this, though. Watch for the move up, get that pendulum swing, right, and then watch for the one failure back down. If I can get this failure going back down, get that momentum shifted, then I can start pounding those sells off the moving average as we go back down. So a lot of this is going to have to do with how the market sets up as it moves higher. Okay, it's kind of a waiting game right now. We're either going strength up and then pulling back, or we're going up, failure, collapsing. Again, get the momentum moving back in the right direction here. Moving average comes over, right, and we're looking to sell going back down into that range. You'll notice I'm not going to try to sell up here, right? I'm not going to play that game. I'm not going to jump in front of that freight train. My goal is, again, because we have so much strength going higher here, is to wait for that momentum to turn and then sell it going back down in. All right, and then of course the lows, right, we'll buy the lows of that trading range. All right, let's keep going here. Got a lot to cover here tonight. I know I'm running a little bit late here already, but I got a lot I want to make sure I give you guys here because tonight's, it's tricky. You know, we come out of the FOMC announcement. I want to make sure you guys have a great day tomorrow. How about some S&P? S&P is range bound and trading down below the lows of the range this evening. I want to buy these lows using seller failure patterns, but the strength of this move lower has so much momentum that I need to wait for the sellers to exhaust on the next test of the moving average before looking for buying opportunities going back up into that range tomorrow. As you can see here tonight, I'm going to be kind of repeating myself quite a bit. Here's another trading range, right? Another trading range. Now, this trading range has a bull bias to it. If you've been watching this newsletter this week, right, we've been talking about this, right? Keep buying off of that low. So, of course, there's my trading range. We're down at the lows of that range. So, naturally, I want to buy this sucker going back up into that range. Okay, now, on top of the range, I've got the move off the high, right? Combine that down bottom. That gives us our pendulum swing. And look where we are. We're right around the pendulum swing. So remember, on oil, we were kind of waiting to see if we can get that next leg up to the pendulum swing. The S&P, we're already there, right? Signed, sealed, delivered, we're there right now. So all we now need is to get that momentum to shift back in the opposite direction. At the same time, I've got a measured move. A to B equals C to D. We're also sitting right there. And on top of that, I can take this trend line, right? That resistance trend line. I can bring it down to that low. And look where we are here too, right? So we've got a lot of reasons to, first of all, not even try to be a seller right now, right? And second of all, look for some buying opportunities. Now, I talked earlier about, right, the two-try rule, right? And basically what I look for is when a market moves outside the range like this, I'm going to use this moving average. And the moving average is always the clue. It's always the separation between a one-try and a two-try. You know, for example, a lot of my new clients, right, they'll ask, well, is this a two-try rule, right? Is that the two-try rule right there? Look, it's two tries. It's not. In my book, it's not. This is one try. It's not until we come back and touch that moving average. So this will be one try, right, and then we go back to the moving average, two tries, and then back up. Okay, that's the trick when it comes to the two-try rule. Strong move down, wait for the move back to the moving average, wait for it again, then we got the two-try rule. Okay, so make sure you remember that. Okay, I get a couple more tricks when it comes to two-try rule, but right, I'll make you guys join that free trading class, right, to give those away. Right, so a little bit more detail about the two-try rule. I'm going to make you work for it, right? Grab that free trading course in the upper right-hand corner, grab the information icon, and I'll see you on the other side. So we get the moving average coming over, right? One try, two try. That leads into one try, two try, failure, strength, pullback, back into that range. So really the key is to let that first try, second try, right, and then start looking for that failure, right? I'm looking for buying opportunities as we go back above that swing high, right, because that's where sellers will have their stop losses. As we go lower and we come back to that moving average, we expect to see sellers enter the market. When they enter the market there, where's their stop going to be? Well, if it was me, my stop would be right above that high, right where the trade becomes invalid. So that's exactly where, as a buyer now, I want to be buying, because when sellers get stopped out, what happens? They become buyers. So now we've got buyers buying the low of the range, and we have sellers now joining the buyers, right, as they get stopped out. This brings the moving average over. I don't want to buy high, right? We're not chasing this move higher. We're waiting now for that pullback, right, and we're buying off that pullback. All right, guys? Nice, easy plan, right? But again, we've got to wait a little bit, because why? Because look at the strength of this move, right? So look at the strength of the move. Let it try again, right? And hey, for all I know, they're going to take this thing way down, right? And if they do, good for them. We'll look for it again. One try, two try, failure, and back up, right? Let them do it. Let them do it, right? It's like when you go fishing. You know, you don't try to reel the fish in right when he bites the hook, right? Let him take some line out. Set the hook. Go for it. Tire yourself out there, kiddo, right? And then we'll reel you into the boat. Okay, that's the trick here. Let them tire themselves out, right? The lower they go, right, the more we have the ability to go back into that range. Okay, so two try rule, one try, two try, failure, back up. If we go up, one try, two try, failure, right? Failure, strength, pull back down in. Stay away from the middle, right? So if we end up going back into that range here, stay away from the middle, right? Buy the low, right? Buy the low of that range. Your goal tomorrow is to buy underneath the low, or right as close as you can, right into that low tomorrow morning. Okay? Now, how do we turn bearish? You know, I know we're trying to buy going back into this range right now. What would it look like, right, for this market to turn bearish? Well, a couple things I'm looking for here would be this. One would be if this turns into a spike in channel, right? If we start seeing this thing turn to a spike in channel here, then I'm going to have to be weary, right? So if we start seeing a spike in channel down here, right, and you'll see it, it'll be obvious. You've got to be thinking now, one more attempt to go lower. And I'm going to try to sell that, right? If we keep grinding lower and we keep holding inside of a channel, in other words, we don't get that momentum to shift back higher and they keep dragging this thing lower, then obviously we've got something bigger on our hands here and we're looking to sell that trap high. But remember, you've got to wait for clear proof, right? There needs to be clear evidence here right now, right, of that channel forming below that range. All right, so make sure you're aware of that. If it does, just keep on going. My gut tells me that's not going to happen tomorrow. Usually big news events, they make a big noise, but then usually it comes right back where we came from the following day. You know, most news events will do that. So we'll see what tomorrow brings, but looking for fading opportunities back into that range. All right, how about the Nasdaq here tomorrow? Now, again, we got retail sales tomorrow morning, so Nasdaq is definitely on our radar early in the session tomorrow. The Nasdaq is range bound, the triangle pattern this evening, and that tells me to fade the breakouts using the two-try rule and failure patterns tomorrow morning. We're trading at the low of this triangle, as you can see, so I'm looking for buying opportunities, but the strength of this recent move lower tells me to allow the sellers to try once more before I try to buy going back into that range right tomorrow. Now here's a great example, right? Strong move down, wait for the pullback, right? And back up we go, right? So we're looking for literally the same pattern here. But I'd rather get it down here, to be honest with you. You'll notice right now, this triangle is relatively small here right now. And what you want to remember is that whether you're dealing with a triangle or you're dealing with a wedge, this would be a bull wedge here, right? whether you're dealing with a flat triangle or a trending wedge, once we get really narrow, right? Once those two trend lines are all on top of each other like this, you don't want to be trying to trade inside the triangle or inside the wedge. What do? You wait for it to break out and then go back into it. Break out and then go back up to it, right? So as we get closer, you can see there's not a lot of space here. Okay, so what I would rather do is I'd rather see this thing keep going, to be honest with you, right? That won't concern me at all, right? I'm looking to go back into that range, get that moving average, one try, two try, failure, right, and back up into that range. Up top, right, one try, two try, failure, right, and back in. The key to a triangle, and we talked about this earlier this week, is to really focus on the edges, right? Focus on the edges. Focus on the major swings, right, of that triangle. See them highlighting right here, right? Kind of the pivots. We go from the low to the high to the low to the high, the high to low, right? Focus on those pivots for your best trades. So, of course, the pivot down here at 72.19, if I can get one try, two try, I can buy down below that pivot, right? We go back up. One try, two try, right? I'm watching that pivot here, selling off that high. Okay, so the key is going to be stay away from the middle of this range tomorrow. I don't care how nasty it is. I don't care how slow and sloppy it is. If we're in the middle of that range, you stay patient, right? You stay patient. Don't go wasting your bullets on trades you don't want to be taking, right? So down, one try, two try, back up, right? Again, look for that pattern, right, at the highs and the lows, right? We go up, right? One try, two try, back down in. Down, one try, two try, back up in. Okay, keep finding those patterns. One try, two try, back up in. One try, two try, back down in. Stay away from the middle, right? And whatever you do, do not try to chase these breakouts going higher. I know they look very enticing, but until we see a new trend develop here right now, I have to be extra careful. Okay, so stay away from those, right? Stay away from that middle. Buy low, sell high, fade the breakouts using the two try rule. Focus on failures. And, what does a breakout look like? This is a brand new range. Unlike crude and the S&P, which have well-established ranges that are getting a little bit annoying at this time, right? But this is a brand new range, right? So what does a breakout look like? A breakout's pretty easy. One try, two try, go, right? I call this a 1-2-3 strength move, right? A 1-2-3 strength move. That means we've got, right, three legs to it. One is a strong move down. Two is a pullback to the moving average, right? And three is a strong move down, right? 1, 2, 3. If we can see that move lower and they hold that pullback and run, well, now this is no longer a trading range anymore. I'm going to find that new bear channel, right? And we'll look for sells up above the high of that channel, okay? On the flip side, we go up 1, 2, 3. At that point now, right, we have a bull market. Find that new high, bring it down to that low, and buy that sucker down at that low, right? At that point, the momentum of the market will be moving in such, right, so that whether this ends up coming back eventually into the range or not, you're going to be able to get a nice trade off that, right, off the low of that channel as we go higher, all right? So relatively easy plan there on the Nasdaq, especially since you guys are experts now, right, on how to trade with ranges. All right, speaking of ranges, how about some gold right now? Gold is range bound. Yeah, shocker. And trading back to the high of the range with a strong run higher. Again, I want to sell the high of this range. I want to use the two try rule. I want to use a buyer failure pattern, but the strength of this move higher tells me to expect buyers waiting on the next pullback to the moving average. So I need to wait and see what their next attempt looks like. Let them run out of momentum, right, before I fade this sucker back down into that range, right, tomorrow morning. Now, as you can see, got a lot going on in this chart, right? Here's the trading range. As I mentioned in last night's newsletter, this range is kind of morphing into it's not smaller, it's kind of lower now, right? Kind of a lower range at this point now. And I've got my pendulum swing, right? Pendulum swing down, pendulum swing up. Right? Again, if you want to learn more about pendulum swings and trading ranges, grab that information icon in the upper right-hand corner, right, and learn that, right, that from that free trading course. So we're coming off of that low, right? The momentum of the market is likely now shifting higher here, and we've still got some more wiggle room, right, up to get that, 1307.1 area. So I really have to wait patiently right now, right? I'm either looking at it this way, right? One try, two try, and then failure back down in, selling that failure, or we're looking at this as a 1-2, right, strong move up, and then I've really got to be careful because at that point now, buyers are going to be buying right that high. I have no intention on buying up there, but I'm going to have to wait for it then to turn before I start looking for that sell, right? So no matter what, right, no matter what, I've got to stay patient here right now on the gold. Remember, tomorrow morning, ECB announcement tomorrow morning. So gold, right, could be twitching all over the place tomorrow early. So be careful, right, on this. Strong move up. There's my moving average. Right, I'm expecting to see another attempt to go higher. What I'm looking for here, because we have the potential of this pendulum swing, what I'm looking for is now a strong move back down into the range. I have no interest in trading the middle. What I do interest though is to find my way back up around that high, right, and sell off of that high, right? Once I see proof that momentum has shifted back in my direction. Right? This is always a little bit tricky, right? It's always a bit tricky. Again, because we still have room for this momentum to swing higher, we have to be weary about trying to sell too early, right? So looking for one try, two try, instead of just selling a failure here, right? You can't trust that one because, again, it's too strong, right? Wait for it to collapse off the high and then get that sell. Trust me, you'll see a lot of folks waiting to sell up around that high because nobody will trust the initial short off the high. They'll be waiting for that market to go back up around those highs again, right, to fade that sucker back down again, right? If the market goes higher here, right, if we go higher here again, which I would expect you're probably going to see this momentum. If not now, right, once it pulls back to that moving average, they're going to try again. That'll bring that moving average over, and then, of course, we're looking for that failure strength and then back down in, right? We'll sell that moving average, right, as it collapses back in. Again, you can try to fade this move here, but the problem is the momentum's going to be so strong going higher. It's going to be difficult to have the cojones, you know what I'm saying? It's going to be difficult to have the balls to sell off that high because there are going to be so many buyers that are trying to buy those dips, right, as it goes out and tries to push out of that trading range. Now, at that point, right, I mean, hey, if we end up going up and we hold and we keep going, well, heck, now we're seeing enough momentum now, we've got to be a buyer, right? And at that point, we'll find that new channel and we'll buy off the low of that channel. It's possible, but it's not probable, right? The reality is we're probably not going to see that happen. What will probably happen is it'll probably one more leg higher, right? Make our job a little bit miserable up here, and then late in the morning down and get that drop, right, tomorrow morning, right? Now, hey, maybe I'm wrong, right? Maybe I'm wrong. Maybe we collapse all the way back down in. If that's the case, right, avoid that sell off the middle, sell off the high, right? Just focus on trying to sell as close to that high of that range as possible. And then if we do end up back down the low of that channel or low of that range, one try, two try, back in, right? One try, two try, back in. One try, two try, back in, right? One try, two try, back in on that range. So relatively easy if it goes back to the low. One try, two try, back in. But again, wait for that next leg higher, then let's dump back in and sell it back in from there. Or, right, let's grab our collapse and then try to sell it right off of that high once we see the momentum turn right in our favor. Again, careful tomorrow morning, right? We got Draghi early, right? 7:30. Between 7:30 and 9 tomorrow. Really going to be careful there. How about some euro right now? Now, there's the euro that we have grown to love, right? Yeah, it's pretty ugly out there right now, but this is exactly what we talked about starting on Monday evening, right? All the way on Monday. Remember 2 days ago when I said we got Draghi on Thursday, so fade the breakouts? Yeah, well, and look what happened, right? We're ahead of the game here. Euro is range bound and trading in the middle of that triangle this evening as the market waits to hear from crazy Mario Draghi tomorrow morning. My plan for trading with the triangle is to focus on failures around the edges, right? Remember selling that two-try rule with buyer failures, buying the two-try rule with seller failures at the edges of that triangle. The only question at this point is, right, what's he got up his sleeve tomorrow morning? Right? What's Draghi going to say tomorrow? We already expect that tomorrow is going to be a big announcement, right? We've heard rumors they're going to be winding down QE. That has huge ramifications, not just in Europe, but in the global economy. So we do expect that to be a major market moving event, right, tomorrow morning. Also expect to be very challenging, right, for all you Euro traders. Now, at the same time, don't forget, we're also watching for rollover here this week. I would not be surprised if tomorrow we get a little double whammy, right? A little Draghi plus rollover. As we see right now, though, right, the 618 contract has all the volume right now, right? The volume is still up, right, higher on that 618 contract. You'll notice when you compare the 618 to the 918, we are still on the 618 contract here right now. The E-minis rolled over last Friday, right? The currencies are the laggers here right now. They're waiting to roll over maybe tomorrow. If not tomorrow, right, probably on Friday. Friday is the actual scheduled rollover date for the euro, but I never pay attention to that. I always watch the volume because that's all that really matters, right, when it comes to rollover. We're not talking about expiration here, right? This is just contract rollover. Okay, so we have our triangle, right? And as I mentioned in last night's newsletter, whenever we have a triangle, what do? We focus on the edges, right? We focus on the edges. And sure enough, what happened here today? Strong move down, pull back to the moving average, strong move up, right? And back into that range. Do you see this pattern, right? Because this pattern happens over and over and over again. One try, back to the moving average. Two tries, failure, strength into pullback and pullback back in. You can trade this on any market, any time frame. It doesn't really matter as long as the market is liquid and as long as you already have identified a trading range, right? Last night on our newsletter, we easily knew this was a trading range, and we knew that we were looking at a buy down around the edges. Remember we said that earlier, right? The edges, right, of that triangle. So we go lower here, one try, two try. Is that the two try rule right there, guys? No, it's not. Why not? Because it's got to come back to the moving average, right? So this is just one try. Pull back, two try. Now we're talking, bam, right back up. Failure leads to strength. That strength move, you don't chase after it. We're professionals. We don't get impulsive like that. We wait for price to pull back, to buy at support, right? That's the pattern we're looking for. Now, obviously, things got a little bit cuckoo later on in the session because, of course, we heard from, right, our Fed here this afternoon in the U.S., and we go right back into that range. Okay, now, I was tempted here to put a pendulum swing on here, but pendulum swings it's a big variable for tomorrow. Here's the potential for the pendulum swing. The pendulum swing on a triangle isn't normally as reliable as the pendulum swing on a range, but as you can see, that pendulum swing puts us up around that 18, right, 400. Now, this is always kind of a catch-22. We know the market's going to want to go higher here right now because at the very least, it's going to want to get up around those edges. Remember that about the triangle, right? It's going to want to get to those edges up there. So we know the market's going to want to go higher here, but do I really want to buy this market right now? See, that's what I said. It's kind of a double-edged sword, right? It's kind of a catch-22. I'm expecting the market to go higher here, but look what happened here, right? Big strong move back up and then bam, back down. So this could easily come slamming back down. And again, with the news tomorrow morning from Draghi early in the session, I'll bet this thing almost it doesn't have a pulse overnight, right? I wouldn't be surprised if this market really struggles to get anything going here in the overnight session. So what I'd rather do is I'd rather let this thing go higher here, let this momentum carry it higher, right? Let those buyers try to buy that pullback, right? We'll let them try to buy that pullback. Then we'll look for that momentum shift, right? We got our failure into strength into pullback, and we'll sell that pullback going back down right into that range. Same pattern, same strategy. It's just the opposite direction right here on the euro. Also, one more thing to keep in mind here for tomorrow, that triangle from today could easily be the megaphone or the inverted or expanding triangle for tomorrow, right? So one try, two try, failure, strength, pull back down in. Watch the opposite side, right? And watch for it to rotate back and forth, right? So as we go down, right, it's going to be one try, two try, failure, strength, back up. One try, two try, failure, strength, back down, right? Using that megaphone. Tough to tell when we'll get free and clear, right, of Mario Draghi tomorrow morning. So keep your eyes open and be careful tomorrow, because in my experience, the euro will take your money as a day trader, right, in and around those ECB announcements. So euro and gold are definitely, we got one eye open on those tomorrow, right? We're watching those early in the session. Again, hopefully I'm wrong. Hopefully it's an easy session, right? And we all make all the money in the world tomorrow. But again, be careful because of that news in the euro and the gold. All right, wrapping things up here. Thank you so much for tuning in here tonight on my newsletter. Don't forget, last chance here, grab that free trading course in the upper right-hand corner, or head over to the website at schooloftrade.com. I've got that free trading course right built into my free trial. Grab that free trial on the homepage. I'll put the links in the description of the YouTube video. And don't forget, we've got beginner, intermediate, and advanced classes here at School of Trade. Our most popular by far is our advanced course. It includes the beginner, the intermediate, unlimited access to our trade room, ongoing support, right, every step of the process, and of course, you and me working hard together every day in our trade room. It's the best place to launch a new career, or if you're an experienced trader, it's by far the best place to learn the strategy, look over my shoulder, discipline, hands-on, positive environment every day in my trade room, right? That will be the last trade room you have to join as an experienced trader. Want more information? Visit the website. Call me in the office. I'm always here to answer your questions, or hit me up on live support, right? I look forward to answering all those questions as well. Excellent job here this week, right? Some traders are calling this the week from hell. I'm calling this week the week filled with opportunities if you know the plan. You got a great plan for tomorrow. Now trade it, right? Don't trade those emotions, trade that plan. And I'll see you guys tomorrow morning, 8 o'clock Eastern time in our trade room. If not, we'll do it again tomorrow night, same time, same place on the next edition of our nightly newsletter. My name is Joseph. Be well out there, will ya? Be nice to each other too, okay? And I'll see you guys next time. Adios, amigos. Bye-bye.